Hi there, welcome to the Stockscores Market Minutes for December 12th, 2011. If you are not already a subscriber to the Stockscores weekly newsletter, please do so at stockscores.com/newsletters.asp. The address is there on your screen, and this newsletter is always free. All right, let's get started with the analysis for this week. First off, we're going to take a look at the euro, which had a pretty rough day today, and that is what dragged North American markets lower as well. There continues to be a strong correlation between North American stock markets and the euro. Now, what's interesting, however, is that the euro has now fallen to an important support level, the lows of early October, and that indicates that we'll probably see a bounce higher. However, given the steepness of this downward trend line, a bounce doesn't have far to go until it hits that downward trend. And so while I think that there will be a bounce in the very short term, until we get a break of that downward trend line, we shouldn't get too optimistic about the euro. Of course, if the euro goes down, the US dollar goes up, and that's exactly what it did today. It too now is up against a trend line. This time it is the downward sloping trend line of this pennant pattern that has been building. So we've got this optimism into the red line here on the chart, and that means we'll probably move lower, but again, not far to fall until it hits support at that rising bottom line that I've drawn in green. Gold took a beating today, not to be much of a surprise given strength in the US dollar. If the US dollar goes up, it makes commodities more expensive for people around the world, and therefore it is not surprising that gold would fall. However, gold has not broken its upward trend line at the pennant, and if we took a longer term view of this chart, gold is still in a long-term upward trend. So I expect that gold will bounce back in the very short term, but ultimately we need to see a break from the pennant, and the direction of that break will telegraph where gold is going to go. Well, oil has had a great run over the last 2.5 months, and it has since got stuck at resistance. In the middle of last week, we saw that upward trend line get broken. I think more than likely oil is just headed sideways here. With a strong US dollar today, oil actually held up very well, and that's a positive if you are long oil. However, expect it to move sideways in the short term. The S&P 500 is bumping up against resistance at its downward trend line and has rising bottoms into that downward trend line. That increases the potential for this market to break that downward trend, and we should watch for that. However, when I look at this chart, I see more room to the downside where support resides at the green line than I see upside to the red line. And so we should be fairly cautious with equities right now. However, if we get a break of that red downward trend line, well, we may just get that Santa Claus rally after all. TSX in a similar situation, we've got rising bottoms over the last couple of months, and that is a positive if you are looking for a trend reversal. However, until we see a break of that downward trend line right in there, we shouldn't get too optimistic about stocks. We should just feel like there is some light at the end of the tunnel right now. Final chart today is a chart of the VXX, which is an ETF representing the VIX index. It doesn't represent it exactly, but the message is clear. The tops are falling quicker than the bottoms are rising, and that means fear is dissipating. Given that the equity markets are bumping up against resistance at their downward trend lines, this is a sign perhaps that fear is abating, that we may finally see a reversal of the tough 5 months that we've had since the market broke down. So overall then, I am neutral on US stocks, pessimistic on Canadian stocks. Really, both of these are very borderline. If we get a break of that downward trend line, things will be better, and I could just as easily have gone neutral on Canadian stocks as well, given those rising bottoms on that chart. I put gold at neutral, although in the long term it is still optimistic. I just think that we are likely to head sideways in the near term, as can be said for oil. Since oil is bumping up against resistance after some pretty decent gains, I think the chances of it moving higher in the near term are relatively low. The equity markets are testing the bear strength right now, and fear is lessening, but until we see a break of that pessimism, we shouldn't get too optimistic. Well, that has been the Stockscores Market Minutes for December 12th, 2011. Again, if you wish to subscribe to that Stockscores newsletter, please go to the address that you see on screen. Have a great week in the market and trade well.